Well, good morning, ladies and gentlemen, and thank you, Corinna Eger, for your warm welcome. I'm truly honored to have been invited back to this year's Frankfurt Digital Finance Conference. Well, in this wonderful building here in Frankfurt's Palmengarten, and to have been asked to hold a keynote to kick off today's event. Allow me to begin my keynote this morning with a quote attributed to Oscar Wilde. The future belongs to those who recognize opportunities before they become obvious. These words, ladies and gentlemen, could not be any better suited to our financial ecosystem. And it's precisely opportunities that I wish to address in my keynote this morning, the opportunities provided by central bank digital currencies, or CBDCs for short, as you know, a subject that is as timely as it is significant. And of course, the future is digital. We are at the cusp of a new era, one in which the digitalization of the financial sector is not just an option, but a necessity. New technologies are venturing into the realm of payments, and new forms of money, such as digital central bank currencies and stable coins, are also emerging as alternatives to physical cash. These developments all pose new challenges for us, for central banks. Ultimately, central banks must continue to ensure secure and efficient payments in line with their mandate and redefine their role in an increasingly digitalized world in order to maintain the public's trust in our monetary system. The question that we therefore now face is, how do we respond to these technological challenges? And that is precisely why we in the Euro system, by that I mean the European Central Bank and the 20 national central banks of the Euro area, member states, including the Bundesbank, are taking a proactive approach to actively help shape the future of Europe's digital finance Euro system. One could argue that the Euro system already offers enough sufficiently well-functioning products, be it physical banknotes and coins or cashless payment instruments. After all, these have proven their worth for decades. But yet, at the same time, we cannot simply ignore the evolving world around us. In an increasingly digitalized society, we must adapt to the changing needs and demands of consumers and rethink our payment services. So let me outline 3 key motivations behind the possible introduction of a retail CBDC in Europe, a digital euro, which we sometimes like to summarize as resilience, autonomy, and efficiency. So let me first start with resilience. The foundation of an independent and efficient monetary policy is the adoption and the use of the euro. By providing our common currency, the euro, its form as a legal tender and as a modern all-in-one digital payment solution, we are paving the way for our currency to enter the digital age, making it future-proof and fit for purpose in an increasingly digital society. The digital euro would thereby help to provide and preserve the euro's fulfillment of the core monetary functions and shield the euro area from competing foreign currencies as well as foreign and, potentially unregulated stablecoins by safeguarding the anchor function of central bank money. Second, the digital euro is necessary to improve the autonomy of the European payment system. In its current form, the European payments landscape is highly dependent on non-European providers. Almost 25 years after the introduction of the euro, we still do not have a digital payment solution that can be used across the entire euro area and that runs on a European infrastructure, which, in my view, is not compatible with the concept of a single European market. Although a small number of successful payment innovations have emerged across the euro area over the past years, such as Ideal in the Netherlands or Bizum in Spain, the reach of these payment solutions usually ends at their respective national borders. And as a result, payments in Europe are largely dependent on international schemes, primarily to those in the United States. But at present, just under 2/3 of all card payments in the euro area are processed by these non-European providers. And I believe that Europe's dependencies in the digital age are likely to increase if we do not fundamentally take matters into our own hands. And then third, this is the issue of efficiency. By creating pan-European payment rail in a technically modern form, we would foster competition and innovation in payments across the continent, which we believe is the best path forward to ensure even more efficiency in the payments world. The payments initiatives we have today, such Bizum, or a relatively new company like Vero, we would be able to integrate the digital euro into their payment applications, thereby enabling them to gain instant European reach. So what would a digital euro be for the common citizen? Although the issues I've just touched upon are very important, they are not necessarily of primarily relevance for the daily life of a majority of citizens in Europe. Hence, what would the digital euro be from the perspective of a customer? I personally believe that the digital euro would not just be a commitment to Europe's autonomy, increase the resilience of our payment systems, and foster competition and innovation. It would also improve payments and make life easier for the 350 million residents of the euro area. The digital euro would serve as an additional means of payment alongside cash. As a digital upgrade of banknotes and coins, it would be an all-in-one payments solution, as we like to call it, when it means it can be used in almost all everyday payment situations, including at retail checkouts, transaction among family and friends, online purchases, and payments to or from public authorities. Furthermore, it would be the first digital currency which could be used both online and offline. That is to say, also in an event of a loss of internet reception. And moreover, the design of the digital euro would ensure that it would offer the highest level of user privacy comparable only to cash. No other digital means of payment in Europe currently offers all these features. Despite the many benefits digital euro would bring for Europe as a whole, we must proceed with caution. The introduction of a digital euro raises important questions about privacy, security, and also the impact on financial stability and monetary policy. We must ensure that the digital euro upholds the highest standards of data protection, that it is resilient against cyber threat, and that it does not have a negative impact on financial stability. Digitalization raises questions not only in terms of how we intend to continue providing access to central bank money for European citizens in future, but also in terms of how we intend to supply money to our wholesale customers. It is and will remain essential that we are able to settle digital transactions using new and innovative technologies such as distributed ledger technology in central bank money. An entire ecosystem is currently evolving around the tokenization of securities, which involves all parts of the financial system. And like other financial players, the Bundesbank and also the Euro system as a whole see the significant benefits that the use of these new technologies could bring. The advantages of DLT, such as automated settlements by means of smart contracts and reduced reconciliation needs, are obviously clear. But to fully harness this potential, we also need an innovative settlement mechanism for the cash leg, one which settles transactions in central bank money. We are therefore working on developing wholesale solutions that enable banks to settle DLT-based financial market transactions in central bank money. The Euro system recently completed an exploration phase together with the market, which ran from May to November 2024, during which we tested various new technologies for wholesale central bank money settlement using real transactions. We as Bundesbank also participated in this exploration for us with its trigger solution, which builds a bridge between DLT platforms and then our conventional target payment system. The feedback that we have received here from the market so far has been very positive. I think we can already say that the exploration phase was a complete success. The anticipated benefits of DLT are seen as having the potentials to address and overcome the ecosystem's current shortcomings, such as fragmentation, complexity, over-intermediation, and also technological inefficiencies, which hinder the growth of a capital markets union in a digital world. And by developing such a new ecosystem from the ground up, it could be made for more integrated and harmonized, featuring a common set of rails, a shared ledger, or a network of fully interoperable ledgers that would guarantee reachability, open access, and also compatibility across the services of all participants. Ladies and gentlemen, our primary focus is now on implementing a short-term wholesale solution to meet the immediate and growing demands of the market. This will buy us some much-needed time to continue working on a longer-term solution for wholesale CBDC, a solution which must ultimately go hand in hand with the evolving financial market ecosystem. Alongside its work into the possible introduction of a digital euro and the exploration of wholesale CBDC, the European Central Bank, together with the entire euro system, has also been turning its focus to another area of payments, on which is increasingly gaining traction, and I mean here the business-to-business payments, or B2B for short. To fully leverage the potential of the evolving payments landscape in the area of CBDCs, last October, the ECB organized a special focus workshop on innovations in B2B payments and the role central bank money could here play in the future. This workshop provided a one-kind platform to learn more about the potential use cases out there in the market. And given the high level of interest shown in the first focus workshop, I'm sure this will not be the last one of its kind. Ladies and gentlemen, the introduction of the digital euro and the exploration of wholesale CBDC and B2B use cases are not just a technical exercise, but a clear commitment to the innovative strengths and competitiveness of Europe. The Bundesbank and the Eurosystem are determined to play here an active role in shaping this digital transformation. And it is, however, crucial that we continue working together and pool our resources and expertise in order to fully exploit the opportunities offered by digitalization to create a strong, stable, and future-proof digital finance system for Europe. That will have been the key messages I wanted to send this morning. Thank you so much for the kind invitation, and thank you for listening to me.
Thank you very much, Burkhard Balz. Thank you, and thank you for joining us again. You mentioned you were here last year, and as I said, it was an honor to have you. Interesting projects. Well, just as our motto, it's time to act Europe, and you're already acting.
But our headquarters are close by, so it's not really an effort, and that's such a great conference, so I'm really enjoying returning here back to your conference.
Thank you very much for your support. I have two more questions, just brief questions. One is, I'm asking myself, well, this is such a European project. How is the collaboration internationally on the digital euro? And I mean by internationally, on the one hand, within Europe, within the countries, the different central banks, and on the other hand, with other countries in the world that are developing central bank digital currencies, maybe not the United States anymore?
Well, of course, there are many different levels of cooperation, especially international cooperation. Well, when we start in Europe, of course, we have created a digital rulebook development group. That means we are having here big exchanges with all the stakeholders within the finance industry. So this is, with the market at the moment, our most important, of course, issue. Then, within the Eurosystem itself, of course, we have the project, but then the steering of the Digital Euro project is done by a high-level task force of the ECB, where all the different central banks of the Eurozone are represented by board members or the level below, and they are directly reporting to the governing council. So this is formally our setup, and of course we are also monitoring quite closely what the project is doing. I can tell you this because I'm the member from the Bundesbank in this high-level task force.
I figured, yeah.
And then, of course, there are many globally cooperations. Most of them are done through the BIS, who is more or less now in a also coordinating role for those who wanted to join a certain project. I could name here the project Meridian that the BRS is doing with some of the Eurosystem central banks together with the Bank of England. Or even on a more global level, we have this great project Guardian, which is led by the MIS in Singapore, but also, again, many Eurosystem banks are participating in this project. So this is definitely the next level. And then, of course, you have mentioned that there will be some changes from across the pond. So in that respect, I'm pretty sure we shouldn't bet in the next couple of years on our highly esteemed colleagues in the US. Because the overall the political message from the new president and the administration is a different one. They wanted to push forward the crypto asset scene, obviously, and also stable coins. So, of course, we are always open to speak with the colleagues and friends in the US, but here I'm a little bit reluctant that they stay involved in those discussions and projects in the upcoming years. But as we have 135 projects on CBDCs around the globe.
135.
135.
Wow.
I'm pretty sure that we all together will push this issue forward, and the Eurosystem, in any case, stay very much committed introducing a CBDC, a digital euro, in a few years from now.
But when we not only look at the US, but also with regard to our next speaker, who is Rafael Otero from DWS Group, and they are involved in a stable coin, which is, yes, the Trump version of the digital money, called All Unity in their case, in the DWS case. Is there like an official view from the central bank on a stable coin?
Well, formally, we have nothing against stable coins, and now the but comes. But, of course, we monitoring closely the developments in the field of stable coins. And of course we have to do that because there could be potential future risks. So we are also in discussions with stablecoin providers. And of course we are not eager to have additional financial risks or additional risks on financial stability. But on the other hand, we have that new kind of regulation in Europe, MiCA. And from my point of view, it's, I would say, groundbreaking regulation for the field of crypto assets. So I'm pretty sure that many other jurisdictions will follow us in this respect, but not so much the United States. I'm also quite sure they will go definitely in a different way, but we still have discussions with the colleagues from the Fed on
and
that.
As I hear, you have a vision for Europe and an optimistic outlook. Thank you so much for joining us, for sharing your thoughts this morning. It was an honor to have you here.
Thank you so much.
Thank you very much.
Thank you.